YouTubers, Mike Martin's here, Mike Martin's channel, just here with updates on the housing crisis. I keep getting articles in. I'm getting flooded. I've already got 14 articles in the last hour. And there's actually one on the side here that looks pretty important. Gold hit 1,350. Gold looks like it's going to be spiking soon. I'm going to check out the market later for gold and silver. Realtors brace for next mortgage crackdown amid shadow banking fear. I think shadows and banking should not be in the same sentence, but it is. The real estate industry is holding its breath as long as regulators look to extend tough mortgage rules in the face of a sharp slowdown in the country's largest market. Canada's banking regulator, the Office of the Superintendent of Financial Institutions, is taking aim at the uninsured mortgage market where homeowners make a down payment of 20% or more. OSFI is proposing stringent stress tests on those borrowers in line with what's already happening in the insured market. The period for public comment on a proposal, formerly known as Guidance B20, ends on Thursday, but the industry is already sounding the alarm over the potential fallout. There is a concern that there has been too much change too quickly. Lauren Ha, CEO of Online Real Estate Patrol Zukaza, told BNN on an email. The industry is already holding its breath to see if the typical back-to-school buyers return in the fall, and this will only serve a further slow in the market. Remember, people, in my last article I just read, people are underwater. Toronto, the last housing market left standing until this spring, is in a rapid cool-down mode following the government intervention. Sales have plummeted, and the average selling price is 19% below the record highs of April. And this was in the last article I read. We need to question whether the regulators want to add more momentum to this slowdown, James Laird, co-founder of RateHub, president, Council of Financial DBB, said in an email. But his math and more stringent stress tests will cut potential home buyer purchasing power some 18%. Laird provides the following example. A family with an annual income of 100 large with a 20% down payment can currently afford a home worth 792 large based on a 2.64% mortgage rate and accounting for property tax and utility costs. If stress test qualified, 4.64%, as the same family would afford $146,500 less home. So it's a somewhat, I could finish this here. Oh, let me go back up here. It's not too long of an article. I was going to leave it for you guys to read. It's the stress test that goes through the current... Then there's always the shadow banking industry. Remember, I did a whole show on shadow banking, guys, way back. We were discussing shadow banking. If the stress test goes through as currently reads, it would cause a large number of current borrowers and buyers purchase the alternative subprime mortgages. Bruce Joseph, principal of Anthem Mortgages, told BNN via email. Why is everyone on email? Doesn't anyone call each other anymore? Still, Joseph says Guidelines B20, the king of tough medicine the housing market needs. This sector typically much looser standards and a large-scale push towards more prudent lending at this point, although the negative for home prices is moving towards long-term stabilization and financial system, said Joseph. If they were in place, it would have prevented any structural economic issues we now face. Okay, guys, you're going to see my ugly mug again. Now, remember when I was talking about this, how basically you have a lot of people that are bought out of the market and they can't get back into the market, and for fear of being bought out permanently and never own a house? Well, a lot of them went to shadow banks and went to very sketchy institutions, or institutions you would never want to deal with, but they were forced to have to take that avenue because they didn't want to be bought out of the market. And I kept telling you guys for the last, 5 years I've been doing these videos, calm down. It's a roller coaster. It's up and down, up and down. Housing, gold, silver. Housing can't go up forever. You know, the millennials need to buy, and the millennials' children need to buy, you know. I'm part of the MTV generation. The MTV generation's getting old. We're getting old. I'm 40 now. We're getting old. The MTV generation is kind of moving ahead now, and hopefully our kids would be able to afford and buy and go forward. You know what I'm trying to say? Anyways, comment below. Let me know what you guys think. Many people underwater right now. Many people are forced to sell. Many people are not forced to sell, but many people don't want to own something worth less than what they're buying it for or what they're paying for it. So let me know what you guys think. Comment below, and if you're in this situation, you could remain anonymous and let us know what's going on with your situation. We'd be more than happy to reply to your comments. Thanks for watching. Don't forget to subscribe button.